Eric, I just want to pick it up on Upstart. What are the biggest risks to you, and where does valuation fit into this growth company?
So the biggest risks are that, say one of their bigger partners were to drop them as a client. Um, they started small, and so they have a couple of bank partners that are, sizable in terms of the number of loans that they're processing. So if one of them were to suddenly, announce tomorrow they were dropping them in favor of somebody else, that would be a big problem. Another source of clients is they have a partnership with Credit Karma, which is now part of the company Intuit that owns like Quicken and all that stuff. And so, if suddenly Intuit was to decide that Credit Karma was not going to partner with Upstart anymore, that would be the other big risk facing them. So I think it's unlikely, but it's a smaller company, as like you said before. And so, yeah, if any, some sudden announcement like that happened, that would definitely hurt the stock.
And how much risk is there in the valuation these days?
Well, when they came public, one thing I really liked about them is that they were getting compared to people like, I don't know if you remember Lending Club from a few years ago, and that was supposed to be a new way of doing fintech with credit. And then they just completely bombed at that model, and they were trading at like sort of 1x revenues. And Upstart got it compared to them. So in my view, it was cheap. But now, things have changed. They've posted these blockbuster quarters 3 times in a row since IPOing. So the biggest risk with valuation is that they had a disappointing quarter or something, and now they're trading at something like 30 times next year's sales. However, I would say that it's all relative here, Catherine, and so if another popular fintech name that is really popular these days is Affirm, which is a sort of another take on the buy now, pay later trend, which Afterpay started. And so when you compare Upstart to those folks, they're actually in line or slightly less expensive in comparison. And the big thing that people are missing, I think, is that Upstart has had incredibly conservative guidance, and Wall Street, their estimates of what Upstart is going to do next year, to my mind, look incredibly conservative. So they're doing something like 300% revenue growth now. Wall Street thinks they're going to do 40% revenue growth next year. I just don't think it's going to slow down that quickly. So I think the likely scenario is they're going to surprise, raise estimates. Wall Street's going to like that, and so that's a long way of saying I don't think they're too stretched here on the valuation.
Okay. When a company beats analyst expectations on Wall Street or Bay Street, that's a very good thing. Stock normally performs quite well on the back of that. Speaking of stocks that have performed well, beating people's expectations is Bombardier. That's another stock that you like, Eric, and you bought it back in June of 2020. I did look at it, didn't buy it. So why do you like it? That's been a very volatile stock.
Sometimes, familiarity breeds contempt. And I think Bombardier has created a lot of contempt, especially in the Canadian market, because it's been around for 20 years and it really has sort of bumbled along and disappointed lots of people many times. And I think many people get to the point where they say, no mas, I just can't deal with this company anymore. What's changed in the last 2 years? Well, the family has taken a step back. They used to run the company. They still control the company, but they did bring back someone who was the former CEO of Hydro-Quebec, and before that he worked at Bombardier, a guy named Eric Martel, 18 months ago or so. As CEO, he brought in a CFO who's sort of like ex-CN Rail, so credible management. And the big thing is that they decided to slim down their operations. So they used to be in ski-doos and sea-doos, and they used to do the trains, like the subway trains in New York and all this. They've sold off all those businesses. They are now just a pure play private jet company. So when I got into the stock, I believe that they could muddle through. I was sort of thinking of the Las Vegas casinos coming out of the 2008 crisis, where the equity got killed because people thought that they wouldn't be able to pay off their debts. Las Vegas Sands dropped from like $80 to $3, And then when the world, realized that it did, things
Right.
didn't end, and they were going to kind of get their way through it, suddenly the stock bounced back. I think the same thing's going to play out with Bombardier. And they arguably have the kind of the best fleet of private jets in the world. And even post-pandemic, it turns out like lots of people want to fly private.
Right.
So I think they're in a very strong position.